All right, good afternoon. Good afternoon. So I got a good one, another good one for you. Um, so first thing I'm gonna do is show you the trade setup that I took early this morning to get another good 60 something plus pip count move. All right, so here's what I was looking at. So obviously last night we saw this particular move play out. This was the one that I caught not on UJ though. I did it on GJ, which is where I caught almost 60 pips. It was like 50 something pips, or what have you. But UJ did a similar move because the Japanese pairs were moving at the time. So obviously, the market does this, moves up, right? And then eventually the market starts moving down, which is what I was anticipating anyway. We see we have this fair value gap here, and basically price came back to fill those orders. Um, yeah, those orders in this fair value gap. So basically, what fair value gaps, if you don't understand what fair value gaps are, is when you have, so this is a bearish fair value gap, meaning that there's price moves so fast in one particular direction or in a bearish direction. There were a lot of sell orders placed, which caused price to move. But a lot of those sell orders were not initiated or triggered or filled, right? Because they just came in so fast. So what typically happens with a fair value gap is eventually price comes back to fill those orders. So it requires buy orders. So for every order, every sell order needs a buy order, every buy order needs a sell order. What moves price is just the aggressiveness one way or another. So if you have more aggressive selling going on, that's where you get more bearish movement. If you have more buying as the aggression, then you'll get bullish movement. So there was a lot of orders that needed to take place in order to fill those sell orders that was in this fair value gap. So obviously that happened, and that rebalances price. So after price was able to rebalance itself, it was able to move down. And what I ended up doing, so because I wasn't up at 2 a.m. in the morning, right, to catch, a move like this or anything like that, right? So by the time I woke up and saw price moving, I was able to jump in on, so this move right here. So this is a two up. So we got two down, a one. Ones are good for continuations. I'll show you. Then we had another two down continuation, right? So we had a 2-1-2 continuation, right? And then we had a two up. Now, this two up, and as we can see, we have a fair value gap here, right? This two up did not go and touch this fair value gap. So what I did with this two up and my understanding of, how this all works now, right? So this was a pullback. Why was it a pullback? It was a pullback because it created a higher high. It created a new high. So it broke the previous downtrend, right? But that didn't mean that we had to change a character or anything like that. It just broke the previous high, which more than likely was a liquidity grab. And we could see that it grabbed the liquidity here, and grabbed some of the liquidity here, right? So after it grabbed the liquidity, it came back, right, into the zone, right? So this two up told me that I have a possibility for a continuation move. So what I did was I put my sell entry order right here. I put my sell entry order right at the low of this two up candle and just waited for price to do its thing. So when this candle opened, it opened right here. It pushed up, right? So that was a little bit of a pullback, right? Didn't create a new high, right? Came back, triggered my order right there at the low, and so pushed down and continued to push down. So my initial target for this move was here, because I realized that once I took this low, the next low that it was going to take was this low here, right? And then I figured once it takes this low, it's going to take this low. So this is where I had my TP. So let's see. From the time that my order triggered, which was right about here, all the way down to my TP, 65 pips. So another easy 60 pip move. played out in a matter of 1, 2, 3, looks like 3 hours. Yep. So around 10 o'clock, I was out of that move. Yeah. And my thought process was that we were probably likely to, get down and, grab this liquidity here at some point. But again, as you all know, I like to target the wicks. I like to target the liquidity that's at the end of these wicks right here. With this spacing right here, there's no guarantee. There's no guarantee with anything, but there really is no guarantee that price is going to continue to move, through this candle right here. So I thought this would be a good place to take profit, seeing as though it was 50 or more pips at the time. So easy move for me. Again, I like the rinse and repeat, do some of the same things that I'm seeing, go on that work time and time again, right? So, all right, that's one method to enter on a continuation, right? So, continuation, and of course, I'd be remiss if I didn't say that I had full time frame continuity at the time that I placed that order, and then looking at the higher time frames as well. So we can look at our time frame continuity. That also lends us to the ability to place these trades and be confident, in our trades. Real quick, so let me show you. I'm gonna switch screens so you can see something else in dealing with time frame continuity. Okay, so this is my multi-time frame chart here of UJ. So my thought process, and kind of look at where I'm going with this, right? So this is the weekly right here. We don't have to look at the monthly at the moment, right? But looking at the weekly right here, so we already know that the monthly, we're working with a bearish candle, 2 down candle already, right? And then with the weekly, so my thought process is that we gained some liquidity out of this fair value gap, right? We feel some of those sell orders that were in there. And so we're continuing to move down. So my thought is that eventually price is going to claim the liquidity that's in this candle right here. There's a lot of buy orders right here. So if the big players want to place big sell orders, then they have these buy orders that's in this candle to be able to fill those sell orders that they have coming in. So that's just the weekly. Let's see what the pip count looks like there. Yep. So we fill all of those buy orders. We're looking at more than 300 pips, right? I mean, yeah, all those buy orders. So then we look down at the daily. So this is where I took my basically my overall trade setup from. All right. So looking at the daily, right? My thought process is and was that we're going to claim, right? This was Monday's candle, right? That we're going to claim majority, if not all of this wick right here. That's my thought process, that we're going to claim majority, if not all of that wick right there. So I was pretty confident in putting that continuation trade in to continue to the downside earlier. So so let's see what that pip count looked like if I got it real early, right? If I got in real early, yeah, 135 with roughly a total of yep, that's that low that I was showing you earlier. And so look, right? So with that being said, so we grabbed that liquidity. So once we break this low right here, there's a possibility of us coming down here, but I'm not sold on that just yet, right? Like I said, I prefer to see it break. I'm more sold on once it breaks this low right here. So if price breaks this low right here, then there's a very, very high probability that it's going to go to get the liquidity that's here. Once it gets the liquidity that's there, there's another high probability that we're going to go ahead and get at least some of the liquidity that's in this candle right here. So let's see what that looks like. So once we break this low right here, right, we go our first target, that's a 59 pipper. If we continue, we can take partials at that first target, right? If we continue though, then we're looking at, let's see what we're looking at here. Let's see. Let's do this way. All right. So we trigger in at the bottom of that candle there. Yep, there's a good chance. Yep, 250 pip move. 250 pip move right there. And we can even target the low if we break the low of that one candle, right? That one up, right? We can go there, we break that, we come down, and we get 190 pips, right? Opportunity on top of opportunity on top of opportunity. You just got to know how to trade it and when to get in, right? And again, like I said, I'm not sold on price breaking this low right here just yet, because we're getting into once we do that, like I said, I don't see where the possible liquidity is once it breaks this low. So I'm more comfortable trading the break of this low right here, and then targeting here, and then also here. So a couple possibilities with that right there. Again, no guarantee that price is going to break this low, and then come down here. I don't know what I'm going to get at that point. So I'll wait for that trade right there, before I look to take another sell, probably on UJ. Of course, I'm always looking for that time frame continuity. All right, some other tips and tricks on getting into maybe continuation trades and things like that. So another thing that you can do, we can look at this candle to candle, and this what I'm about to show you can be done on any time frame, right? We're just going to use the daily as an example, right? So here we see that we have a 1 bar, right? Now ones aren't really, they're not really bullish or bearish. Remember, they're inside bars. So it doesn't delineate whether, this is a bullish or bearish candle necessarily, even though it has a color, right? But the color is good. That color is not a bad thing. So any case, so what I want to show is, so let's say you do have something like this, right? A good entry, and this is the daily. This is the daily. So what you want to kind of do is, if I have if I'm looking to go bearish, right? So you have this one here. If I want to look to go bearish, and this is the daily, then I would look to trigger in. So this candle basically closed right here, right? Closed right here, which means this candle opened right here. So what I would like to see is price pull back, right? Which is what it did, right? And what you want to do is look for buy opportunities above the opening of this price. You can look for buy opportunities, or you can be conservative and say, no, I'm sorry, sell opportunities, sell. We're looking for sell opportunities, right? Above the opening price. Or what you can do is you can be conservative and say, hey, I'll put my sell order just a little bit below the close of the previous day, right? I'll put my sell entry order just below, so that when price comes back, after it pulls back a little bit, I can trigger in and then capture all of today's candle, right? Right. We don't know what that looks like. We don't know what that looks like. You don't know if you're going to get a candle like this, right? But you may, right? And this is the daily that we're talking about. If I'm triggered in, so what do you do? How do you trade that? So what I'm gonna do is I'm gonna go to my single chart candle and show you how you trade that. This is one of the things that you can do. Okay, so here's what we do. All right, so I'm gonna go to the daily real quick. I'm gonna show you how we enter this, how we do this, how you could possibly do this entry here. Okay. All right, so here's what you can do, right? So if I'm looking to get in, right, once price crosses here, let me show you what I'm gonna do. What I'm gonna do is I'm gonna put an entry line. I'm gonna put an entry line. Let me just show you this. The entry line. All right, so I'm gonna put a horizontal line. All right, that's my trigger line right there, right? And I use entry limit orders to place my orders. So once price pulled back and then came back into the zone, reclaim that closing price, then I'm triggered in at that price level right there. So this would have been 147.504 as a trigger to get in. I probably would have did it at 500. I like round numbers, right? To trigger in. Now the pip count on this one, if we wrote it out now, we got a target here, we got some liquidity there, and we got some liquidity there. Oh, and by the way, we got liquidity there. So I would have looked to, if I got in this daily move, I would have looked to have grabbed all of that, all of that. So let's see what the pip count would look like. So I would have triggered in right about here, right? and then my target would have been right here. So 225 pipper, right? Close 230 pips. I'm good with that. I'm good with that. I like those odds. And I would have did it all in one day. All in one day. So you see how price it grabbed. So triggered in, we grabbed that liquidity, then we came and grabbed that liquidity, then we came and grabbed that liquidity. Then we had you had an inside. Basically, this is today's candle. So we're looking at today, an inside day, right? On the daily. We didn't create a new low and we didn't create a new high. So it was an inside day. So with that being said, we're pretty bearish. So we can possibly look to put an entry right here at the low of this candle. But like I was saying earlier, we don't know if price is going to come and claim, this low right here, these lows right here or not. But, maybe we get triggered in and maybe not. So if price does come down, trigger us in, then we're in the move. You put a good stop loss. No, back to what I was saying. So back to this entry right here. So then what you do, so if you got your time set, right? So we're gonna go down to the 1 hour. That's the daily. We'll go down to the 1 hour. Okay. Here's what happened, right? So we see that on the 9 p.m. candle, price came and gave us a close below that daily, right? So price opened and then price gave us a close, right? So price gave us a close below that candle. All right, so that let us know right there that price was ready to move down for the rest of the day. Now we see once we got that close, right? We did get a pullback, right? So here's what you do. Again, we're this is the daily candle, the hourly, just dropping down to the hourly to get an idea of what's going on, right? So we see we got that close. We're not going to necessarily trigger in yet, or if we have our order, we probably did get triggered in if we were in that. Just showing you different ways that you can do this. All right. So this method, again, a little bit more conservative, right? So we'll wait. We can come down to the lower time frame. So let's go even lower and see what that looks like. So because I'm waiting for opportunity, right? So we can do this. Let's go down to the 5 minute and really, really get an idea of what that looks like. I'm going to blow this up a bit so you can see what this looks like. This is just an illustration of how you can trade this, right? So remember, this is our daily line right here, right? So price comes down below it, right? And we close, right? Price comes back in the zone. Then price leaves the zone, right? So we can trigger in at this point. Once price comes back and gives us another close, right? Gives us another close below it, we can trigger in and then ride this out for the rest of the day. We can ride this out for the rest of the day. Now, what happened, let's see. So price triggered right here initially, right? So if you had your sell order placed there, right? It pulled back about, let's say 14, 15 pips before the continuation to the downside. So it pulled back. So if you had a pretty decent stop loss, and let's see what we could have done as a stop loss if we did it on the daily, right? So if we did this on the daily, right? So let's say we did this on the daily. – Okay, so we did this on the daily, right? So if we did this on the daily, we said we pull back. Let me see something. So once it triggered in, no, that one was actually 50. That was actually a 50 something pip pullback once it triggered in, which is why we wanted to try to get a later, get that entry on the second time. And then we see how it pushed down. But again, this is just an illustration of how you can catch that. You do it on the 1 hour, just an illustration on the daily though, because this is typically, so you can see the same thing kind of played out. So on the next day, so price closed right here, right? And we see price pull back all the way back here before it pushed all the way down to where it is right now. So we came back, reclaimed that opening or that closing price from the previous day, and then continue to push down. Right, same thing, rinse and repeat. Right, came back, claimed that area, then boom, here, 119, yeah, 119 pips on the day, 100 and something pips on the day. So again, wait for a pullback, wait for price to come back and claim that entry right there, right? And then we go ahead and get in. That's if you're watching it. Okay. Let's see. I think I already showed the continuation, the continuation method. So let's go to the 1 hour real quick. Just to again reiterate the ability for continuation and stuff, because those can be really key. Um, and again, all of this happens based off of our time frame continuity, right? It's the same formula. The formula really doesn't change. We're looking for liquidity. Again, our best moves are going to come, where our targets, we're targeting liquidity, right? Again, we're trading what we know to be true. What we know to be true. Again, price creates this pullback right here. I'm looking to get in at the low of that price. I get triggered in, put my stop loss somewhere, right? And then targets, again, it's important to set realistic targets, so here, right? My first target, right? Liquidity right here. So if I triggered in right there, I'm targeting this liquidity right here. I'm targeting those stop losses that are there. So we're triggering stops on the way down. Then, I'm looking to trigger here. I'm looking to take all of that liquidity right there. Then I'm looking at stops here. That's it. That's it. I'm good for the day. Once I done collected the stops along the way, right? I'm good. That's my target. I'm good for trading for the day. I'll wait for the next setup. All right. You got some reversal things going on as well. But again, everything being based off of time frame continuity. For me, I at least need to, and again, the way I've set this up right here is the time frame continuity is based off the week anyway. The week, daily, and the 1 hour is what the time frame continuity is based off of here. I still have this one down here to tell me to keep me on track as well. Monthly, weekly, daily, 4 hour, and the hour. So again, I'm not placing a trade if I don't have time frame continuity with at least the weekly, the daily, and the hourly. And we'll include the 4 hour, right? If I do, that gives me confidence in my trade. And all I'm doing is, again, when I see stuff like this, see this is a 2-up bar, right? I can easily, put a order down here. But again, the idea is that we're probably going to go and claim, the liquidity here. But it's a little late in the day, so I'm not looking to place any more trades today. I'll wait for the next setup, again, to take those trades. Okay. All right. Hope this makes sense. And then as always, good luck and happy trading.